Welcome, everybody. This is Tesla Today. We have some wonderful graphs and charts that I'd love to share with you. I saw them this morning. I thought they're really, really cool. It talks about your projection of both ICE cars as well as what you think both Tesla and all the other OEM manufacturers, what they're going to do. We're going to look at Volkswagen's investments recently and changes to Tesla Gigafactory in Berlin. We have Brian White joining us. He is his own host of his own YouTube channel called MyTeslaWeekend, and you have to check out his channel because I love his videos. He has incredible information that no one else is talking about. Honestly, I'm not just saying that. Your knowledge is just crazy good about mostly the factories and supply chain. And I even seen your forecast as well, which I think you need to dig up and we need to review that again, Brian. But yeah, follow Brian at his My Tesla Weekend YouTube. Welcome, Brian. It's Friday.
It is Friday, Herbert. And as always, we managed to scare up the best news of the week.
I don't know how this happens, but it has actually been a very, very quiet week for Tesla. And so most days I already have a bunch of, topics to talk about, but usually it hasn't. But today it always just comes together. And I think people will like what we're going to share with them today. So let's get going. So the first one is, this is again, an older news. This didn't happen. That happened 2 days ago. This is Tesla Today. This is supposed to be stuff that happens in the last 24 hours. This one happened 2 days ago, but it feeds into all the things that happened today. So we heard that Volkswagen announced a $193 billion investment in EVs and software. So they are going for it, which we're happy that they're doing that. And what they're saying is that this will be in areas such as battery cell production, software, and expanding its presence in North America and China to cut its costs and so forth. They said that $122 billion, more than 2/3 of that money, will be allotted for electrification and digitalization. This has been a huge increase, 56% increase from its last 5-year plan. And so they're really needing to go for this and make it happen. And then this morning, they announced that they're going to invest in mines because they need to be a global battery supplier. So what they talked about here is that they're going to invest in mines to bring down the cost of battery cells to meet half of its own demand. So half of it will be for its own demand, and the other half will be selling to third-party customers. There's this, I think people are waking up to the fact that if battery constraint is going to be the biggest concern. And if you have all these battery suppliers, you've been saying this for months, Brian, that they are going to pick the company that has, much certain volumes and certain sales and demand, of which Tesla meets that. But which other OEM can say that they're going to sell in big quantities? And so Volkswagen stepping up, and they're saying they're going to invest in mines. So their Power Co is their battery unit that they've been investing in. That's going to start next year. It's going to meet half of its own demand with plants in Europe and North America. And then they're going to start delivering these cells to Ford for the 1.2 million that Ford is building in Europe. And then, of course, the bottleneck would be raw materials. And then this is what we just said. They said that if you guarantee financing for the mine development, it can actually cut years off of times for junior miners. And so that's why they're doing that. And what else do we have here? It's going to start, the production will start in 2025 at PowerCo's plant in Germany, and in 2026 in Spain, 2027 Ontario, Canada. I'm shocked that it doesn't say, wait, didn't we hear them that they're going to also start in Canada because of the IRA? Anyways, go ahead, Brian. Tell me everything you know about both of these topics.
Well, on the $193 billion, I love to see it. It's ambitious. It's a lot of money. If any startup said that they were going to spend even a tenth of that, you'd think they're crazy because it's too much money. $193 billion. That's going to take every spare penny they have for 10, 15 years. That's huge. Is it enough? Yes and no. You saw with their army of 10,000 coders, they weren't able to get car software working because 10,000 is the wrong number. It's too many. So I think on the $193 billion, we're going to have some we're going to see some big movements, and that's important. On the mining, that's going to be another good one because like you said, if the money is already there and guaranteed, you can get a mine moving more quickly rather than on speculation. Jordan Giesecke from the Limiting Factor is seriously concerned about mineral supply, and this will take a big step towards alleviating that. And then on producing their own batteries, that's interesting. The question will become, can you do it at a competitive price? CATL and BYD are very big, and they provide cells to just about everybody, and they are cost leaders. Can VW step in and do these things competently, capably, and profitably? That's what remains to be seen. Because if you got a bunch of cells and they're 30% more expensive, they better be at least 10% better. So it'll be interesting to see how this works out, but it's all steps in the right direction.
We have a question from Andrew Jameson. He asks, what type of cells are they producing? Do you know?
We don't know yet, but it's going to be, from a lot of the videos I've seen recently, a lot of these companies say the chemistries are all going to be roughly the same regardless of form factor. So we don't know. I don't know.
Okay. Yeah, we need to find out because they didn't actually say how much money they're putting in the mining.
Correct.
So we need to dig into it. I was making that joke earlier this morning. We need to dig into this. Sorry. You don't laugh at my jokes. I laugh at your jokes all the time. Okay, fine. All right. So another thing that I dug up from a couple of days ago. See, I use the word dug again. Because I'm talking to you. You're the expert in this area. So I needed to bring this topic back up again. So big news. I think this is probably the biggest news that we heard about Tesla in this week, which is they're going to increase the production in Giga Berlin from 500,000 to 1 million vehicles just by expanding their production capability capacity within the existing factory that they have. And then they've also now submitted application for the expansion of Giga Berlin, and I think that they've resolved the issues, they've kind of explained the issues with the water and environment that we've been watching, trying to be delayed by protesters and so forth. So, what's your tell me your opinion on what's happening here?
So that's a slight misread of it. The way I read it was that expanding from 500,000 to 1 million is within the same site, not within the same factory, not within the same building.
Oh, okay.
So that's to add phase 2. If you look at the way things are built, it will no longer be a 4-phase factory because they've used up so much of the space where a second phase would be on the southeast corner where the 4680 building and motorworks are. So at most they could put 2 or 3 actual buildings there. But 500,000, is that the real number? I'm telling you, man, that's sandbagged, because Giga Berlin is 3/4 the size of Giga Shanghai. And Giga Shanghai is already at a run rate of around 1 million. So that would say it's already at 650,000 capacity. And a lot of the footage in Berlin, in Shanghai, is dedicated to the Model 3, which is a less efficient design iteration. It's still linear construction rather than vertical, and it certainly doesn't do anything for the unboxed building philosophy, which is going to be even more space conservative. And so I think this isn't going to expand it to 1 million. It's going to be at least 1.2 to 1.4 million in capacity. And that's still, every Tesla factory, no matter how much capacity they build, they can still get some more units out. So I think it's going to be a lot bigger than that. And remember, in Shanghai, they said capacity 450,000 plus. They only updated that when they were already at 650, 700,000. So this is a very modern, very efficient factory, and it's just nonstop.
Right. So this is a thing that people are we're starting to talk about more, which is what you just said, right? Which is they're talking about expanding the footprint within existing space that they have, and then now they're expanding even further. But if they do the Gen 3 platform, they can have double the number of cars produced in the exact same footprint. So they're
Right.
like doubling, but also another doubling.
Right.
Right?
And the second part of your question was about the water.
Yeah.
There's plenty of water, like Elon said, but it's already spoken for by others, including the nearby coal mine, which uses, I don't remember, 100 times as much water as Tesla. But they were there first. They get the first rights. And that will eventually shut down. But in the meantime, they don't need to expand their water permit because their reprocessing efficiencies are so fantastic that even doubling the capacity, they can still get by on their existing water permit without going over usage.
So I've got another question here from Mark Browning. Let's hope Giga Berlin expansion has been designed to use the Gen 3 platform.
I am sure it has. I am sure it
I
has.
think so too.
It'd be crazy not to. And the other question is, what are they going to build in that expansion?
Oops.
Oh, that's all right. What are they going to build in that expansion? It's not going to be Model 3 because China is able to produce enough Model 3s to satisfy the European market mostly. It's going to be something new.
I love it. Yeah. We were talking about that. Yeah. So China, they need to produce Gen 3 platform would be for China and for Europe.
Yes.
Of course,
And the Gen
make it in
3,
Mexico too.
Yeah. A smaller vehicle is what's needed for European streets and for a lot of markets, for the Asian markets as well. A lot of busy places need something smaller. The Model 3 is a good size, but it's still kind of big for old roads.
Yeah, and then
parking.
when you look at the number 70 million cars, it's going to be in every factory. Every factory you will produce it. It's not like it's just going to be one here and one there, right?
Very exciting.
Very good information as always, Brian. Thank you for that. Now, I'm pretty excited about these next graphs. So let me show you some graphs that I found that I thought was really cool. And I want to spend more time on it. So this one here is from the EIA. So Brian, go ahead and tell me, who is the EIA?
That's the Electrification Information. Let me see. I've got it up. It's a federal agency that tracks statistics, Energy Information Administration. And they make predictions like this very bold prediction here.
Yeah, it's not very bold. Okay, so this is the EIA and what they've done here. And this is very recent. Like this is like 2023. Okay, so they're saying, first of all, hey, the IRA incentives is going to speed the growth in sales of electric vehicles. Okay, great. But here's the historical. You can see the growth of electric vehicles. And then they carry it forward and they go, look, by 2030, we're going to be at 15%. By 2040. Look at this. It flattens out. We're going to be at 18%.
They have professional comedians working there. I didn't know.
18% of all vehicles will be electric vehicles by 2050. And that's because of the IRA. If there was no IRA, it'd be these lower lines. Okay, this is ridiculous, of course. So then Professor Ray Willis, I don't know who he is. I don't know if he's credible or not. He goes, hey, I fixed your projection of EVs in the US for you. It's going to be faster, not slower. So let's take a look what he did. So he drew this beautiful line up. 2021 changed the dates, 22, 23. Okay. That's his line. I thought that was absolutely correct. Lots of fun. I'd be curious to have a conversation with folks if they think this is correct. And then the conversation gets even more exciting and fun. He goes, look, if every OEM, if every car maker plans to sell more electric vehicles, they have stated that, how could the share of EV sales as a proportion of all vehicle sales go slower, not faster? That's one of his points. And then this person came up with this fun fact, and it's really cool. And the fun fact is that if you take every single OEM and you find out what their electric vehicle targets are for 2030, interestingly, it adds up to 100% of current auto sales. So if we take a look at this graph, and so you got your Tesla saying they're going to get to 20 million. You got your BYD in China, it includes the China and includes Tesla. And then you look at all the projections by all the other GM, what they think that they'll hit of electric vehicles by 2030. It adds up to 100%. Well, actually, it doesn't look like 100%, but yeah, 80 million of what is the current auto sales per year. What does this tell me? It tells me that, first of all, why are people concerned that Tesla might not be able to make the 20 million because the competition is coming? even if the competition comes and they hit their targets, it still leaves room for Tesla to at least get 20 million per year. And you might debate me on production, and you might debate me on demand. Let's talk about that. But the competition can come, and they'll still be able to affordably get their 20 million. And the big question for me is, what if these guys do not hit their targets, which is very highly likely that they might not hit their targets. And if they don't, Tesla can go well beyond. And if they can produce more, they can hit more. So I just love this graph. What's your reaction to this?
Well, starting with Professor Ray, I don't know how credible he is either, but his take on that chart is absolutely right. The very notion that it would flatten out in the middle of this decade and then flatten out again at 2030 is unlikely, and especially at those figures. If you look at, what's his name? The disruption guy who does those great...
Clayton? Christensen?
No, the one who anyway, there's an S curve coming, and with disruption you always miss it. Yes. It is Tony Seba. It is always overlooked, and that chart is a prime example of it. I think the revised chart that Professor Ray did is absolutely correct. It is, if anything, maybe even a bit conservative, because it shows by 2023 only getting to about 25-30%. You look at Europe, where it's going to be mandatory before too long, 100%. You look at China, where it's already something like 30% of all sales are electric. To imagine that the US would be that far behind is a little bit ridiculous, and that's crazy. When it comes to that stack chart, you're absolutely right. If everybody hits their target, and there's plenty of room for legacy guys to miss, there's plenty of room for Tesla to miss. But what we're talking about is Tesla. They're building the capacity. We can see that. If the products are only getting cheaper, that builds the demand, that builds the market itself. And the total addressable market isn't EVs, it's vehicles. So it shows a tremendous lack of ambition on the parts of everyone except really Tesla. And I think, like you said, if you can build them, you can sell them. Today, that's the case. The reason we're not seeing more sales, somebody said, why did GM only make 40,000 Bolts last year? Because there's a limit to how much money they're able to lose in total. And every car they sell is a loss. And they make some of it up by not having to buy ZEV credits, carbon offset credits, but you can't make up all of it, apparently, or they'd be selling more.
Yeah, this is the question, right? And I know one of the commenters said Gary Black begs to differ. Exactly. So we've been listening to the conversation between Gary and Farzad, and I get, Farzad's comment, which is, if the management says that they're going to hit 20 million and they're showing you the factories and they're showing you the segments that they're headed towards, I would put my money that we are putting our money that it's going to happen. But Gary says, you know what? No, because if they get 20 million, that would be 40% of the sales, and that's the market share. And this is what my point here is that if you just look at everybody else's forecasts, what they will do, then great, we'll keep our 20%, the 20 million. But the reality is, what's the chance that these guys do not hit what they're saying they're going to hit too, right? I don't know. I mean, so let's talk about that. So this is the next set of the slides, which I was really happy to see, which is Professor Ray Willis as well, that car makers are not going to build what people won't buy, which is what he's saying here is that ICE makers are making the ICE cars. And do you think that in 2030, 2050, there's going to be, 50% of cars will still be ICE cars versus EVs? Like, how quickly would the switch be to electric vehicles? And so now this, I think, is his own graphs, his own projections after a certain date here. So this, I think here in 2022, this is real. And then, 2023 and 24 are real, or 23 is real. So basically, the orange is ICE vehicle sales, and then the green is battery electric vehicles, and then there's the plug-ins and the hybrids. Okay, so we're seeing a decline. The peak ICE already happened at 2018. Now it's been declining, and we're seeing electric vehicles jumping, but very early, still at the beginning. Now, if you look at the next few years, so this is 2024 here in the middle, and then we move to 25, 26, all the way to 2030. This is his own projections. Okay, so he is saying he's pretty aggressive. He's going, no, I mean, basically by 2027, the vast majority of sales will at that point be electric vehicles. I don't think this is maybe a little too aggressive. I'd be curious to hear what you think, but there does come a point when somebody buys an ICE car, and then they know that in 5 years when they want to sell it, it's going to be like even worse depreciation because everybody wants the electric vehicles now. And also, what happens when electric vehicles they're already at price parity today, but that's because of the IRAs in the US. But very soon, they're not only going to be at price parity, but they're going to be cheaper to buy because you don't have to pay for the gas and service costs. So yeah, what's your thought here?
My first thought is the hybrids on that chart, I think, are grossly underrepresented because they qualify for a lot of the incentives, which means we'll see more of them. Remember, there's the economies of scale have tipping points, and ICE is already in the death spiral. You're going to have to start paying more for your parts because you're buying fewer of them. How do you keep parts in reserve for repairs, even warranty repairs, when you're not buying 1 million of them, but 50,000, 100,000? It gets tricky. And all of a sudden your costs start to spiral. And that's where we're already at. We're already seeing that. I think it was on the Corvette, maybe, where their supplier went out of business and they could no longer get replacement engines. So if you've got, if you blow a motor on your Corvette that's under warranty, can you get it fixed? Can you get it? What are they going to spend on those warranty repairs? And the answer is more than they are used to. So it's kind of we are in the death spiral. The internal combustion. Yeah.
Yeah. I don't think still pretty aggressive, right?
I agree that the BEV market share is overly aggressive. I don't believe that there's going to be enough batteries to hit those numbers that quickly.
Correct. Agreed. So this is kind of wishful thinking that this is going to be like 100% EV sales by 2027. Yeah. It's not going to happen, but it's not as slow as people think. And actually, it's not going to be this gradual decline. We're going to see ICE cars going out of business because they have huge amount of debts. They got these they're anchored by these ICE cars, like you said, and then they own the financing. So all of those are going to collapse and they can't sustain.
Yeah. So it's potentially ridiculous. And I'm not sure where they're getting the idea that there will be fewer sales from 2027 to 2030. I know there'll be higher utilization when robotaxi finally comes around, but there's already higher utilization by people putting cars out on Turo fleets and just keeping them in motion more than they would before. There are a lot of electric vehicles on Turo, and it's not just Tesla. It's Polestar, it's Volkswagen, it's Kia, it's Hyundai. And there's a lot of exciting models coming out, and despite my disappointments with a number of them, they're getting better with each iteration, and you love to see it.
Okay. So the other bit of news that came out this morning was Morgan Stanley came out with a statement, and it says, this is Omar shared. It says Morgan Stanley wonders how long Ford's ICE business can cover electric vehicle losses. They're starting to put two and two together. So let's take a look at the actual statement that Morgan Stanley said. So they said, I think if you look here down below, this the last sentence is good. Ford will give the market a better glimpse at the scale of losses within its EV biz while showing the significant cash flows of the ICE business. Investors must ponder how long the latter can fund the former as margins fall and cost of capital rises. So their EV business has been falling significantly. If you look at this last paragraph, EV sector, their profits their Ford Model E is in a negative 10 to 20%. And their adjusted EBITDA margins is negative 20, 30%. So they're losing a ton of money on the EVs, but they're making profit on their ICE vehicles. So it's like at some point, as what we've been talking about, as that flips, where the demand for the EV goes up, they're forced to sell their EVs at a loss. Meanwhile, they are making profit in the ICE, but if nobody wants them anymore, that margin will erode very quickly. Then they're caught. They're very caught quickly.
So they've got a couple problems there. Yes, they are losing money on their EVs. Sandy Munro from Munro and Associates has recently hinted that he believes the Ford Lightning is profitable on a per unit basis, but not very. The real problem Ford's going to have isn't just that they're losing a bit of money on each car, but that the margins on their ICE vehicles at 8% is not sustainable. It's only been that high because they've been able to focus on the premium trims because the market for new vehicles has been so tight. In July, we peaked at something like 42 to 45% of new vehicles were sold over MSRP, and now it's down to 31%, and it'll get back to the point where they're selling around MSRP, and at that point, Ford's going to have to start selling the lower trim versions with lower margins, and that's going to accelerate their losses. So they've got to get their butts in gear real quick because the day of reckoning is at hand.
The day of reckoning is at hand. You're so gloomy.
Well, not as I'm not invested in Ford, so no, it's all good news to me.
It's not good news.
No, it's not. I don't want Ford to fail. I want Ford to come out of this stronger and better. And yeah, it's tough. You know, Mary Barra from GM said they expect to be profitable on their EVs by 2025. That is a dim outlook. It's going to be very tough for them to survive and transition. And like you said, with so much of their revenue coming from the finance division, how do you keep those loans in good standing, those assets in the positive, when a repossessed vehicle is worth less than the debt on it? It's potentially quite scary for them.
The repossessed vehicles worth less than this is so everybody's been saying for several years the competition is coming, and when they come, Tesla's market share would be a lot less. These guys can create electric vehicle cars just as easily, and they'll produce it in volume. They've got the factories. They have the know-how. I think that in the last year, this year and last year and the year before, we're seeing signs that that's not true. Not even close to being true.
Not even close. No, they've got factories, right? But they're building all new ones because they're not the right tool for the job. Yeah. This is more different than diesel versus unleaded. This is a completely different thing. And having the factories hasn't helped. Having the engineers hasn't helped. Having competency in manufacturing hasn't helped. If anything, it seems to be slowing them down.
And then yesterday we heard that in Norway, Tesla became finally like higher than Volkswagen in electric vehicle sales. So the strength of the brand, the brand loyalty is so strong, right? So that's part of the reason why they say competition is coming, because if Volkswagen or BMW and other car manufacturers create their version of EVs, people will want to stay with them. But in Norway, Tesla finally crossed over and became the most high selling. And so it shows that, Tesla is able to kind of surpass the brand loyalty that people have. And it's looking like that's what's going to happen unless they start creating competitive, very good cars that are, maybe not as good as Tesla. They don't have to be as good because they have the brand loyalty, right?
Well, and they're also in many cases cheaper. The fact that
what is cheaper?
The competition's cars in many cases are less expensive to purchase in Europe than, an ID4, an ID3.
You mean ICE?
Well, no, I just mean in Europe, Tesla's still selling incredibly well, despite being more expensive. I mean, I think it's Skoda has a $21,000 EV on the market.
I see.
And you would think that those would sell like hotcakes.
I see.
But for some reason, Tesla still outsells them at twice the price and more. So
Mhm.
it's going to be tough. And Volkswagen just announced, well, we've got a compact coming out soon. That runs a very real risk of making VW buyers hold off and not buy an ID3 or 4, waiting for the ID2.
So
Because
you
if
actually
you
think it
want,
might backfire? Yeah.
I think it absolutely might backfire.
I love it. Yeah, because we were just joking around that it's not really a joke, but they came out with an ID2 All, and it's a $25,000 Euro car, compact, as good as a Golf. It's going to be the everyday car, but it's just a press release and it's just a concept car, and the chance of them creating this is very low. But they went out and made the press release, and everybody's now going, "Oh, great! Volkswagen has a competitor to the Gen 3 compact car, which nobody's seen yet." And yet, here's one company, Tesla, is showing all the ways they're going to build it, the platform, the factories, the modular design, but they didn't show the actual design. Meanwhile, Volkswagen shows you the actual, graphic artist created design that is concept that never really comes to fruition anyways.
A beautiful
Yeah.
render that is not going to look like that when it's made. I think it's a risky move, and I don't think it was the right move.
Right. And so in terms of we were talking about it this morning, which is battery constraint is actually a good thing for Tesla, because in this environment, even if a competitor is able to create their factories and able to create their cars and everything's fine, they need to bank on the battery and supply. And that's why Volkswagen is now putting in a ton of money, getting into mining and trying to show that we're going to have the highest volume. So there should come out of this just maybe 2 or 3 that will, but if they have to put in a lot of money, commit fully to EVs, and then they can sign the deals with the battery manufacturers and convince them to do long-term deals with them in addition to Tesla, and then the rest are shit out of luck,
Right.
But then they themselves commit to the mining. So do you think it's going to be Volkswagen, it's going to be BYD, it's going to be Tesla, anybody else?
None others jump to mind. Ford and GM are putting on a good show, and I hope they do step up in those ways. They both have joint ventures with battery manufacturers to help bring down costs and further qualify for federal incentives. I am hopeful, but I am not convinced. If I had to buy something other than Tesla, BYD would excite me if they were traded on a market that I trust more, an exchange that I trust more. And Volkswagen, I do believe, will come out the other side of this and survive.
It sounds like they're making the right moves, at least. I also think Ford's making the right moves, right? To split off their EV business, separate company. But they're struggling. They can't get their business right-sided. So that's slowing them down, right? They couldn't build the software. They made all these moves. They're making the right decisions, at least, but in reality, it's not working out for them.
Not yet. Not yet. To be determined.
Okay. Thank you so much, Brian. Everybody follow Brian on My Tesla Weekend. The other thing we want to share, if you happen to live in the Northwest, I have a Tesla Northwest group that Brian and I belong to. It's a bunch of Tesla people who are really enthusiasts, but we're having a meetup in Portland at Creed Coffee. And so it's going to be in Vancouver, Washington, actually. And it's EVs and caffeine. So March 18th, which is tomorrow, 10 a.m. to 12 p.m. So if you happen to be there, any EV too, by the way, not just Teslas, all makes and models are welcome. Go there and visit. Brian will be there. Say hello. And then what's the other thing you want to plug today?
Yeah, I've got 2 big things coming up today. Tonight at 6 on My Tesla Weekend, I've got an interview with Herbert. We're talking about what makes the Cybertruck an unbeatable, unstoppable, one-of-a-kind, revolutionary thing. It's information you guys know, but we're digging into it a little deeper and in ways that you might not have seen. And the other thing is, tonight at 7 p.m., I may be going live on my second channel, My Tesla Live, from an authentic Irish St. Patty's party with the cousins because we are
Are you
very
Irish?
Irish. Oh, yeah. Oh, very Irish. I'm eligible for dual citizenship. It's just expensive. But yeah, so that's something I will be maybe doing. And if I do, it'll be a wild one. It'll be very strange. And there will be some Tesla chat, some Elon chat as well, because there
Yeah.
are a handful of enthusiasts in the family. It's going to be crazy.
I'm going to tune in. Thanks, everybody.